Lowe is posting fourth quarter numbers earlier this morning, topping analysts' expectations, raising guidance as well for the next fiscal year. Same-store sales also beating estimates. Joining us right now in a first on CNBC interview is Marvin Ellison. He's Lowe's chairman, president, and CEO. Marvin, it's great to have you on the broadcast this morning. Congratulations on the earnings. Let's talk about what's going on in the economy, because you have become a bellwether of it and what you are seeing.
Hey, thank you. It's great to be with you this morning. Well, when you think about the macro environment for home improvement, it's very positive. You have continued home price appreciation, and when home prices go up, consumers have confidence to invest in their homes. And a data point I've used frequently is that in the U.S., 50% of the homes are over 40 years old, and that drives repair and maintenance activities. And for Lowe's, 2/3 of our annual sales are driven from repair and maintenance. And I think we all know that although we're dealing with some macroeconomic challenges, if you look at our consumer base right now, you have $2.5 trillion of additional savings versus pre-pandemic levels. And so we feel good about the macro environment specific to home improvement, and we're still in an undersupply home situation. We estimate that we have 1.5 million less homes available than what demand is seeking. And so all of those factors bode well for Lowe's and for home improvement.
Marvin, to the extent there are skeptics, there have been skeptics that had a view that when we return to normal, whatever normal was supposed to look like, and if the Fed really did take its foot off the gas, that housing, that the Lowe's of the world, the Home Depots of the world would become more challenged, that the American public would spend their money more on services, they'd take more trips. All this money that had been effectively moved towards home improvement would move back. You don't think that's the case?
You know, Andrew, I don't. Now, obviously, none of us have a crystal ball, but, there are a couple of fundamental things we look at. I think we all would agree that in the last 2 years, we've spent more time in our physical homes than we have in our lifetimes. I think we also will agree that there will be some fundamental changes that will persist, post-pandemic, and one is work from home. I don't know about you, but I took additional steps to modify my home to ensure that the workspace for myself and my wife were more adequate, and a lot of homeowners are doing the exact same thing. And because we have now millions of people who will permanently work from home, the general wear and tear that is tied to that is going to be something that will persist for a very long period of time. The other thing that we've done is that we've done a survey of consumers, homeowners, and professional contractors, asking fundamental questions about what do they see in their purchasing behaviors today and in the future. And over 50% of the homeowners that we surveyed are saying that they're going to invest in a home improvement project, in 2022, and equally the same percent said that they're going to be hiring a contractor. So although we think that there will be some adjustments to purchasing patterns, we think that the fundamental use and purpose of the home has forever changed. And the question is, who will be the most customer-centric business that provides convenience for a customer to shop in-store, online? And we think Lowe's has positioned ourselves very well to serve that customer population.